Hi there, and welcome. This is the Mark Donovan podcast show, and my name is Mark Donovan. Today, I will discuss the top 10 market influences, mortgage trends, and the changes that are coming in the mortgage market in Canada for 2019. I will be focusing today in the Montreal market. By listing the top 10 market influences, it will give us good indicators on what will be occurring in the real estate market in Montreal for 2019. So let's get started by listing the top 10 market influences, number one being the record high sale prices. We can expect record high sale prices to be a thing in Montreal for 2019. Despite tightening rules and mortgage lending, products and programs that are no longer available for mortgages or have been tapered back by the banks, despite all these things, we will still see continued sale prices to increase in Montreal for 2019. Since Montreal as a whole has a lot of catching up to do in comparison to other metropolitan areas in Canada, for values and prices of homes, the market prices are actually very affordable. This also causes bidding wars and multiple offer situations for the realtors acting on behalf of buyers, and it sort of fuels record high sale prices to continue to be a thing in Montreal. While keeping in mind the supply and demand theory, if supply or inventory in Montreal is low, then naturally the demand will become high, and this will fuel again another aspect of the record high sale prices in Canada for 2019 in general and focused in Montreal. Well, that being said, record high sale prices makes our list at number one. Number two on our list is affordability. Despite value increase, are properties affordable? Can Canadians afford the homes they're buying today? Since tighter rules were implicated in qualifying for a mortgage in January 2018, it's safe to say that if you are obtaining financing for a mortgage today, you can qualify, and if you are qualifying, it is affordable for you. So Montreal being the subject metropolitan area that I'm focusing on, as I was saying in the number one indicator of record high sale prices, properties are actually still affordable. And this is a great aspect of buying and selling real estate in Montreal. And so the good news is that if you are buying and selling real estate in Montreal, you will be able to get bang for your buck, and affordability will be something that you will benefit from in 2019 as an outlook, despite record high sale prices that will actually continue to occur in 2019 in Montreal. Next on our list, number three, regulation changes for mortgages. Unlike other years such as 2017, where the government announced several changes to be made and implicated for 2018, there have been no regulation change announcements from the Bank of Canada or the governments for mortgage financing. No game-changing announcements have been made, and this is good news. Since organizations that evaluate credit risk and make policy changes have not made any announcements for 2019, because they did such a wonderful job at making tremendous changes in years before, such as 2017 and 2018, we are now seeing the consumer reaction. And in January now, 2019, we will be seeing more reaction in order to determine what happens next for this year. So it's a green light. It's a green light knowing that regulation changes have not been announced, and this will have cautious consumers knowing what they're doing, affording the mortgages that they're qualifying for, and buying properties that are affordable And this is a green light for you in 2019. What makes number 4 on our list is leveraging. Are Canadians leveraged too much? Can they afford more? Statistics show actually that Canadians have been leveraging more from banks and financial institutions who are authorizing loans for car loans and unsecured credit as well as mortgage financing. And while it's become commonplace for Canadians to be taking out monthly payments on things such as car loans or mortgages, we want to say that leveraging is something that we should all be wary about and cautious about making our next move. And having the regulation changes that occurred in 2018 now in place, our consumer reaction should be a little bit more cautious. And leveraging is something that everybody should weigh out their amounts and their max loan amounts. And the banks have put that in place for many, many years, and all more so with the tightening policies that have already occurred. So leveraging is something that is an indicator, and it will be something determined based on your qualifying for the loans you're asking for on a much more higher qualifying rate than what you're actually paying. And with such safeguards in place, Canadian banks are very much still in business and open for mortgage financing and mortgage lending, knowing that the lending rules are much tighter and conservative. Number 5 on our list is politics. Politics is something that will definitely come to play in your indicators for buying and selling real estate in 2019. Why would politics come into play? Lobbying for changes and reactions in the market have been materializing more so now in 2019. Now we are also seeing that soon this year, 2019, we will see election time. And it's very safe to say that a cooling on the interest rate, despite the inflation that was very much strong in 2018. In 2019, I would say with the elections coming in place, that it's not going to give the candidates much of a popularity vote. And also, too, it's not realistic to see much inflation increase, knowing that we are in election year and U.S. will be in 2020. So there's a lot of volatility in the market, and a lot has to do with politics. So we could see that politics will be an indicator for you. It's another green light. It's another way of indicating or perceiving how you're going to react in buying and selling real estate and obtaining mortgage financing. And that's why we made politics number 5 on our list. And so moving on to number 6 on our list is the job market. Unemployment and job growth. Growth speculation in Montreal. Although there has been some closures and announcements of closures in companies across Canada for major manufacturing companies, including GM and Bombardier, we've also seen considerable job stability and job growth. There has been also announcements of lots of infrastructure growth and expansion in Montreal and billions of dollars being injected, which will provide jobs for Montrealers, and they will give the stability, which will give the people an understanding that their leveraging is going to be sustained with being able to make their monthly payments, knowing that jobs are in place for a long term. Next, we're going to highlight number 7 on our list, and we're going to basically say that the bond markets and the markets for the interest rates will be an influence, as always, on how people will be getting their pricing. Will be they be taking 5-year or 3-year terms? Will they be going on fixed or variable? It all will depend on what the 5-year bond rate will do and what the Bank of Canada will do with the benchmark rate. This could trigger a cooling or less inflation for 2019. This could be something that will make more people savvy to get pre-approved and ready for buying, and knowing that they might be going into bidding wars, and this could be things that will trigger and literally have an impact that consumers will take out mortgage financing, and it will be an indicator more or less to determine what type of term you will be taking. Will you be taking a short term? Will you be taking a long term to guarantee your rate longer, but at a premium? And so, that being said, with obtaining mortgage financing being what most Canadians are doing, the bond markets will be a very strong indicator, and that's why it takes number 7 in our list. And while number 8 on our list is definitely consumer confidence. Canadians feeling at ease, desiring the home, confident in their job stability, not affected by policy change too much, not leveraged or leveraged fairly. Seeing bidding wars indicates consumer confidence, where the consumer stands. So this is really an emotional aspect to buying and selling real estate, but it's also based on solid facts, such as job stability and affordability. This is what gets implemented in a person based on their personal situation. And in general, the consumer confidence is strong, knowing that there is tons of job and employment opportunities. And it's very safe to say that people can lock in a job and work and make their monthly payments. It's going to drive consumer confidence up in Montreal. So that's another good news indicator, and something that is strong in Canada in general. And like I said, we're focusing in Montreal. And so moving on to number 9 on our list is new construction. So a lot of new construction is still continuing to be a thing in Montreal for 2019. There are no changes. It is definitely on the go. People are buying for either investment properties, condos. They're signing preliminary contracts for 18 to 24 month delivery. So for future and current investments, the outlook is good. People are buying, and by the time they actually get the condo delivered to them, the value will probably have gone up from what they've paid for it on the preliminary contract. This is a good indicator to see continued projects in Montreal, and announcements of new projects on the go and coming up. Very nice looking properties as well. As a side note, some of these projects are just stunning, and everybody's acting upon it for their own personal reasons, for owner occupancy, or for investment, or for future properties to hold. With the speculation that their kids will be entering into our fantastic universities and needing a place to stay, it's going to make sense for people to buy these properties. And that being said, new construction is definitely on the go. It's a good news indicator once again for Montrealers to see, and it's going to be a thing which will definitely be something that you'll look at in favor, and hopefully you'll do well with your investment. And being that we're actually in January 2019 right now, as this is being published, I could tell you that there has been already statistics of a 12% on average increase in value on condos. So that's and resale. There has been an increase as well. And these are coming from stats in Montreal locally. And that's a strong indicator that it's showing that the condos are very affordable. It's an attractive buy for a lot of buyers, a lot of people who are single income, no kids, perhaps double income, no kids, and some, of course, small families. Now, last but not least, number 10 on our list is immigration. Immigration is actually a factor that should be on any list as an indicator always. So with population increase means new construction necessity. They are coming in oftentimes now with job permits and work permits, and they are coming in with education background, bringing in more jobs. Gives the consumer confidence. It drives the market. Immigration is definitely a factor in the Montreal market. As we know, there is plenty of immigrants coming into Canada, and they are landing in Montreal. However, immigration is also a negative indicator and can be because of mortgage programs. Some of the mortgage programs that have been modified or eliminated have to do with resident and non-resident mortgage programs. Some banks have changed completely or eliminated the programs themselves and have made it very difficult for them to obtain financing. So although immigration increases population, it could mean that they will be renting for a time, which will drive investors to buy the new construction and to buy the resale properties, and until they're landed on their feet. But ultimately, they can still qualify for mortgage programs, and especially if you're coming in with a work permit and permanent residency cards, the programs are available. It's just now the mortgage rules have changed so that the banks are qualifying them more diligently on job verifications, whereas this was a thing that was not taking place in their due diligence, just because it was very normal that a person coming into the country or a non-resident is very difficult to verify and validate employment. It's very normal for a new Canadian to not have the job that they are qualified for right at the beginning. It's also very normal that they wouldn't have credit. So a lot of these things have been modified, and now the banks are starting to validate job confirmations much more focused, and immigration is definitely a driving force because of the population increase demands more residential space to be either occupied or created. And so that's it. Thank you very much for listening to the top 10 market influences for Canadians buying and selling real estate, obtaining mortgage financing in Canada. And in 2019, the list goes as from top to bottom. Number 1, record high sale prices. Number 2, affordability. Number 3, regulation changes. Number 4, leveraging. Number 5, politics. Number 6, jobs and stability or unemployment levels. Number 7, the bond markets. Number 8, consumer confidence. Number 9, construction. Number 10, immigration. That is your list for 2019. That is the indicators that you should be looking for to help you make a wise choice and determine your buying power in Canada in 2019, focused in Montreal. My name is Mark Donovan. This is the Mark Donovan podcast show, and thank you for listening.